Good morning, good afternoon, good evening, ladies and gentlemen. Let me welcome you at the Digital London FP&A Circle. My name is Olga Rudakova. I'm a FP&A professional, dashboard design trainer, and FP&A trends ambassador. I'm happy to facilitate this meeting for you tonight. Our topic will be cash flow planning and why the traditional profit-driven mindset needs to be rethought. Seems to be quite popular topic. We have over 300 registrations for the event. 60% of the audience is from UK as expected, but all the rest are coming from 42 different countries. Most of our audience, 45%, are senior finance practitioners, and another large part, 43%, are middle level management. So quite senior audience tonight. Let me start by actually walking you through our previous meetings. And if you feel that you have missed some of them, at least digital ones, it's certainly worth going back and watch a recording. What we can expect tonight. Tonight at the agenda, we'll be speaking about rethinking traditional approach to cash flow planning. We'll speak about why cash is not a king, but cash flow is. We'll be speaking about integrated cash flow planning throughout an organization lifecycle. We will see how to be a better business partner in cash flow planning and how technology can help us. We'll take some conclusions, takeaways, and recommendations. And certainly we will have Q&A session. You're all invited to participate through the chat box. Feel free to start right away. And now I'm happy to introduce our esteemed panel of speakers. Dear panelists, please join me on the webcam. And now we'll start introductions with you, Atif. Atif Hafiz is CFO, Corporate Treasurer, and Board Member. He's a London FP&A Board Member. He has over 20 years of financial leadership and business credentials within global organizations. He has predominant private activity and, by the way, public equity experience in technology, B2B, and C environment. He is executive and non-executive board member. Atif, I'm very happy to have you with us tonight.
Thank you, Olga. Happy to be here.
Now, second speaker for tonight is William Howell. William is a senior FP&A manager at Honda of the UK manufacturing. William is a London FP&A board member. He's responsible for revolutionizing the budgeting and reporting process through the creation of truly integrated business planning system. He's an FP&A specialist with a track record of process improvement and implementing change in several multinational organizations. William, I'm glad that you could join us tonight.
Good evening and good afternoon, everybody. Very excited to share some thoughts with you.
The next speaker I have a great pleasure to introduce is Gemma Davey. Gemma is Associate Director, Performance at the comparethemarket.com. Gemma is as well London FP&A board member. She has over 20 years experience with FP&A. She's specializing in the technology sector. She's a thought leader in FP&A business partnering, coach, and mentor. Gemma, I'm happy to have you with us tonight.
Hi, Holgan. It's great to be here as well.
And the last speaker for tonight will be Bob Elliott, Senior Solution Manager at Unit 4. Bob is based in France. He had lifetime career in FP&A as both client and vendor. He has extensive solution architect and client engagement experience. As well, he has cross-sectoring experience in EPM and CPM solutions on multiple platforms. Bob is business modeling expert. Bob, I'm happy that you could join us tonight.
Thank you, and I'm very glad to be here, and as everyone else, look forward to sharing my thoughts.
Great, I'm glad that you could all join despite these difficult times. What I want to say next, before we move on to the topic, I wanted to walk you through our key projects and initiatives. FP&A Group is not only International FP&A Board, but it is well education, online resource, webinars, workshops, and many more. As well, it's FP&A strategic advisory and research. What we can expect tonight? Tonight, we are going to see 90 minutes webinar. We expect your active participation through Q&A and through 4 interactive polls. Networking is also possible. Please feel free to add all the speakers, all the panelists through LinkedIn. Presentation is already available in your handouts, and you will receive the recording and the copy of presentation within 2 days after the meeting. Please don't leave without taking a brief survey after the event. It takes only a minute or so, but your feedback is very valuable to us. It's time to thank our technology partner, Unit 4, a global leader in enterprise cloud software for people-centric organizations. Unit 4, thank you for making this event possible. And coming back to the topic on rethinking traditional approach to cash flow planning, let me start with a quote. A quote by Elaine Profeld, business writer. She said that there is really only one way to address cash flow crunches, and it is planning, so you can prevent them in advance. Whether we can prevent all the crunches by planning still remains a question, but certainly understanding your cash flow drivers, planning ahead, gives you this flexibility to react. Nevertheless, cash flow planning, at least in the organizations I come across with, is not based yet at the business drivers. It's based a lot on hoping and praying. Let's see how tonight's event can change that. We have ambition tonight to answer 4 key questions around cash flow planning. Why? Why is it important? What to take into account? Who should be responsible for cash flow planning? And how technology can help. And we will start certainly with why. And who else will be better to start this presentation than Atif? Atif will be speaking about the topic, cash is not a king, cash flow is. Atif, stage is yours.
Thank you so much, Olga, and hello, everyone. I'm quite pleased to be sharing my views with all of you today. I've had a distinct set of responsibilities, multi-hatting as the country CFO and the global treasurer in a private equity ecosystem. And what I'm about to share with you aren't essentially the nuggets of my wisdom, rather a few experiences and learnings that my teams and I've gathered particularly over the past two odd years. Through my financial leadership lens, let's see how we moved from past to present. When we were largely sitting pretty prior to the recent crises, cash planning was mostly treated as a legacy function that fed into overall FP&A or BP&A or the treasury function if it existed. It was more processual efficiency than personal effectiveness that we sought. We were to find answers to the existing or recurring questions. Entirely new questions were only necessitated when major strategic changes were afoot. For global organizations, the kind of organizations that I'm associated with, international finance was mostly considered as an exclusive fabric, wherein inclusive cash planning, for example, generally ivory towered. Overall liquidity governance was driven by leadership as one-way street. The concept of leadership followership as an interwoven framework wasn't seen as often. Now, let's see how we have been transitioning from the new normal to next normal to never normal in my world. We mustn't have any doubt now that the abilities of humans and computers are improving at an increasing pace amidst the pandemic. Hence, my definition of team combines talent and technology to understand archetypical business model better in order to plan its future better. In a growth-driven environment, the kind of environment that I'm mostly accustomed to, I believe this is how we can synthesize collated information and convert a sprawling and multifaceted business dynamics into a clear-cut process of cause and effect, simplifying without oversimplifying as we envelope our various pains and reflections together. And that has been seen to transform conventional cash management to present-day cash leadership. That is to say, more center stage, more frequent, and more decision ready. To share with you an example from my personal experience, to address the special needs of this approach that I just shared with you, I adopted principles of red teaming to introduce challenger mindset into what is usually a groupthink setup when we are cash planning. As a result, the underlying assumptions for cash planning gained more quality. Red teaming pushed us to improve our questions and in turn the assumptions that we made about the future. So far, dealing with the consequences of COVID-19 pandemic has been a journey from leadership to leadership, as I put it. Inclusive leadership combined with situational leadership became the go-to framework to rely on and to live up to the expectations that the business has from the finance as a whole. And as such, the leadership followership loop helped finance teams come together. Again, another example that I can share with you is that I started convening virtual fireside Fridays for a couple of hours every week, where all manner of conversations were on the menu except for work. Now, still living through the confluence of first Brexit and then coronavirus. Now, the big question is, what have we learned so far? And how can we use that learning to shape the future or forecasting the future? Truth be told, it is a heavyweight question to carry to its possible answer. But let me try and answer that tonight. First, I believe that learning is a learned behavior. We ought to take careful and regular notes of new principles and practices that are emerging whilst we are facing the unprecedented uncertainties. Consequently, as finance leaders, we will be better prepared to uphold the rules of business physics when, heavens forbid, the perils of next crisis hit us. Second, in my view, the primary focus now is to pursue sustainable cash flow to ensure business sustainability, regardless of the size of an organization that you work for, which is perhaps why oft-avoided liquidity continuity plan ought to be in place, which should reflect organizational uniqueness and bear fair bit of similarity with business continuity plans as we know them. And that is because cash flow is the new king, having graduated from a working capital need to a deep business desire. In the end, I would like to leave a few emerging thoughts with you from my team's notebook. Treasury business partnering, for example, is a reality. It's a real thing now, especially for cash planning and forecasting. Corporate actions are in the air, be it M&A or dividend announcements if you work for a listed company. So be cash conscious even more than before. ERP, TMS, and smart fintech platforms can and should enjoy a symbiotic relationship. Crypto assets, the considerations in reporting that we are hearing about, and cybersecurity are budding realities, so keep a regular eye on them. That's all from me today. Over to you, Olga.
Thank you, Atif, for sharing your angle and for sharing your finance leadership angle, as well as sharing your real practices, what you introduced with your team. We will move on and we will actually go to our first polling question for tonight. So dear audience, please be prepared to answer these questions, and let me start the first poll. So the question is, has your organization changed its approach to cash flow planning during a pandemic or post-pandemic? One option is no, because we always have focused on cash flows. Yes, we have made significant changes, or not yet, but we are planning improvements throughout this year. Or no, and we don't plan any changes. Let's see how you vote. Already 40% voted. Has the organization changed the approach to cash flow planning? No, because we don't have to. We already are focusing on cash flow. Yes, and we have made significant changes. Not yet, but we are planning to do so. And no, we don't plan any changes. So it looks like that most of you have voted. Let me close the poll and share the results with you. What do we see? Quite even results. Excluding these options, no, we are not planning any changes. Oh, that looks nice. It looks like that every organization, everyone present here feels this need for the change. Let's see what our panelists think. And let me hide the result and move on to our short discussions. Please, dear panelists, join me here with your cameras and your microphones. And I would like you to ask you a short question. How our approach to cash flow planning should change during this time of uncertainty? And I will start with you, William. What is your thinking?
Yes, I think really that cash has probably never had more of a focus than it does now during these uncertain times that we've experienced during the pandemic. So I think if there was ever an appropriate catalyst and an appropriate time to change your approach to cash flow planning and sharpen your cash flow planning, then now is probably it. If not now, then when is probably the question to pose if it is meeting some resistance from leadership.
Oh yeah, that sounds like a strong call to action. If not now, then when? Gemma, what is your thinking? How our approach should change?
Yeah, I think in uncertainty, it's about having regular check-ins in terms of cash flow planning. Maybe you move more from a formal way of forecasting to really that informal way, looking at different scenarios. So yeah, really being sort of flexible with your forecasting.
Very good. I'm actually like how you are changing angles and covering all the angles to this question. Let me ask you, Bob, how our approach to cash flow planning should change.
I think I echo both Gemma and William. The thought we have to do more, and we have to have as much as possible of the team who affect business outcomes need to be involved. They need to be cash aware. Tying back with what Atif was saying about how we can join up ERP and TMS to get the conversation going, because I think, as I'll iterate in my section, this is about the stars are aligning to actually facilitate this. Both the need and the technologies and the awareness is all there.
Thank you. Thank you for your answer, Bob. And it's coming back to you, Atif. What is your thinking? How our approach should change?
Well, obviously agreeing with all the panelists, I think I personally feel that the accuracy, the need for accuracy and frequency, those are the watchwords, which is why focusing on team collaboration across the organization is the key in order to receive data, validate it, and be factual about it, be radically realistic about it, so that the cash flow planning that we are doing is more reliable, more decision ready, and therefore the chances for surprises are minimal as we move forward into the future.
Thank you, all of you, for your answers. It looks like we have all the ingredients for exactly accurate and decision-ready cash flow planning. You've named them all. And with that, let me move on and give the word to William with his session, because we'll be going to speak what's important, what to keep in mind when planning cash flow. And William will present his thoughts on the topic of integrated cash flow planning throughout an organization's life cycle. William, the stage is yours.
Thank you very much, Olga, and good afternoon, good evening, good morning, depending on where you are in the world. Thank you everyone for joining and taking some time from your busy schedules to listen to a bit of my thoughts and experience on this subject. So as we look at cash flow through the various different life cycle steps of an organization, I've just simplistically broken this down into 3 areas. When a company is small or a startup, cash really is everything to them. And certainly in the experience that I've had in working with smaller organizations, cash can sometimes be very hand to mouth. Literally, concerns are focused on when are we going to make payroll or whether we can make payments to key suppliers. Cash forecasting really becomes much more important in these kind of organizations than profit forecasting. And then as a company moves on, either that could be into a substantial growth phase or becoming more of a medium-sized entity, the focus might shift a little. Cash is certainly required to enable growth. I experienced working with a company that was preparing for a major growth driven by a government regulation change, and it needed to scale up in advance. Cash planning during this time was very, very challenging. And really required, sometimes almost daily calls with lenders and investors. And to come on to that point, lenders and investors are essential during this kind of medium phase, and they really don't like surprises. Then looking at more large enterprise size or multinational organizations, organizational priorities can change for boards or shareholders. A company may be in a period where it's looking to return money or cash to shareholders, perhaps by issuing dividends or a share repurchase. And later in the presentation, we'll also look at integrated FP&A and the kind of holy grail of XP&A. So if we move on now to look at why cash flow planning is a priority. As we said, in SMEs and startups, if you look at some of the statistics, 29% of all startups will fail due to a cash crisis, and 50% of startups will fail within their first 5 years. So of every 100 businesses that start during 2021, 15 of those 100 will have failed due to a cash crisis by 2026. Most of those SMEs that fail are actually profitable. It's just that they have in some way failed to plan or manage their cash effectively. As we said, cash is essential to fuel growth, move out of that kind of small business into something more of an enterprise or a medium-sized business. As I mentioned previously, banks and investors really don't like surprises, so careful planning to keep them abreast of requirements is important. Looking at more at the enterprise and multinationals, board and shareholder priorities, as we said, that could be around returning money to shareholders through dividends or through share repurchases, which obviously need to be carefully planned and announced to the market. But this could be that the company is looking at an acquisition, moving into a new market space, which requires substantial capex, or even looking at being sold or acquired itself. Balance sheet resilience has become more and more important as we've had these uncertain times. Firstly, raised as a particular topic during the global financial crisis, and then more recently with the COVID-19 pandemic. Obviously, cash planning can also have an impact on profitability. Poor cash planning in terms of bad debt can directly hit the bottom line, but also, if there's not an effective FX strategy or if FX requirements are represented incorrectly, this can result in companies losing money through that market. And then perception in the marketplace, really tied to the 2 points above. But shareholders, potential investors certainly look at this and are very interested in how companies manage their cash, especially any potential activist investors. So if we move on now to look at the kind of cash flow link with FP&A, you know, first thing is that all financial plans really are cash driven. When you complete an investment appraisal, for example, net present value of a net present value, it's cash flows that are measured, not profit. Growth, as we said, is fueled by cash, and FX is obviously important for managing cash. So really, cash does very quickly become everyone's concern. Also, cash flow never lies, and I know Gemma will come on and talk about this a little bit more, but you know, with controls and sensitivity analysis, cash flow is something that can really highlight if planning in other areas is incomplete, and almost to the extent, you know, I've had an experience of working in another business where there was a fraud, and the detection of this came down to the fact that cash reporting and profit reporting were moving in opposite directions. And finally, Bob will talk more about technology in his presentation, but it is very important to ensure that FP&A has the right tools. You know, if you have an effective integrated P&L and balance sheet forecasting tool with the right interventions and preparing a balance of assumptions, you can then create a very effective cash flow tool down to a detailed level with the correct technology as a partner. So, as I said, we'll now move to look at cash flow and, you know, kind of full integration or XP&A. Obviously, XP&A is very popular in our industry at the moment and really highlights the best that FP&A has to bring across an enterprise and tries to emulate that in other areas. I think to achieve this, it's important to bust some of the myths around cash and to address some of the sacred cows. And one of the major myths, which Atif touched on, is that cash is kind of, you know, Treasury's problem. It can only be a Treasury issue. Treasury can't plan effectively without good inputs from FP&A. You know, a classic sacred cow as well in, you know, larger organizations is that the corporation has loads of cash and therefore it's not a problem. You know, I think that there are many ex-employees of Carillion who unfortunately would have found out the hard way for them that is something that is not always the case, and many other companies or large corporations that have failed largely due to cash. Managing cash is essential and is everyone's concern, as I said. So perhaps just one last question is, can any FP&A team that's truly aiming to be integrated or world-class make that claim and share their world-class or their market-leading experience across an organization and into other functional teams if something as important as cash flow is ignored? So thank you very much, everyone, for your time, and I'll go back to you.
Thank you, William, for your presentation. It's clear that there is hardly any organizations you should not care about cash flow, and you've clearly explained why it's important to all of us. Let us all move on. I would encourage all members of our audience, don't hesitate to ask your questions to you already heard two presentations of our panelists. I'm pretty sure that you have something to ask. Meanwhile, I'll ask you something. We'll start with the next polling question, and this time it will be, how much time do you devote to cash flow planning? So let me share this polling question with you. How much time do you devote to cash flow planning? Is it from 0 to 5%, so practically you don't plan cash flows? It's 5 to 15%, 15 to 25, or even over 25. Let's see how it goes in your organizations in post-pandemic environment. How much time do you devote to cash flow planning in your planning cycle? 0 to 5%, 5 to 15%, 15 to 25, or over 25. It's time for us to close the poll and look at the results. We see that actually 5 to 15% prevails. So it's not a big percentage, but at least it's not zero. That's very good to know. And let's ask our panelists a related question to that. Let me hide polling results and share this question with all of you. Should the percentage of time spent on cash flow planning vary by type of organization? And I will start with you, Gemma. What do you think? Should this percentage vary?
It's a really interesting question. And actually, I don't think there is a right answer. I think it really depends on your individual organisation. So, you know, maybe you're a small organisation might spend more time because you are going from hand to mouth, but that doesn't necessarily mean that a large organisation shouldn't be focused on cash. It might be actually that you are very vulnerable to your cash flow at the moment. There may be some big drivers in terms of macroeconomic conditions, or maybe you've got a particular issue with one of your key suppliers or key customers. So I don't think there is a one size fits all. It's what's right for your business at that time.
That's very good answer. Saying that to everyone it's important and it's very specific to your type of organization. Let me turn this question to you, Bob. Should the percentage of time spent on cash flow planning vary by type of the organization?
I think from my perspective, it's not the percentage of time that you spend, it's are you getting value from that time? If your time cash flow planning is spent copying, pasting, checking whether your starting point is right, and if you've made an adjustment, does it still make sense, and does it stack up with the last starting or finishing point you had? So really it's about, are you getting good value for the time that you do spend on the planning, such that you may vary enormously from one period to another depending on market circumstances and what's going on in your particular organization. But it's really down to getting effective value from your cash flow planning process, from my perspective.
Thank you for your answer, Bob. And I will pass the word to you, Atif. What do you think? Should this percentage change by type of the organization?
In my view, and I agree with Gemma and Bob, that it's unique to the organization, number one, of course. It depends what sort of business needs you have right now and in the short to medium to long-term future. But at the same time, the structure of how the planning is done within that organization, that's the key. So you can achieve agile planning, but to Bob's point, being agile, is it serving your purpose? It is actually giving you what you need. So that also changes from organization to organization. But I think in my experience, based on my associations with the organizations over the past 2 years and the conversations I have had with my colleagues in the industry, the importance, we all agree on that, the importance of cash is increasing, and importance of cash planning is also increasing, depending on the specifics. But I think the percentage of time spent on cash planning is increasing as to the best of my understanding and knowledge. So that's my view.
Thank you for that view, Atif. And let me pass this word to William. Should this percentage change based on the type of organization? And you spoke about it a lot, but this percentage should be, I understand that it's important to everyone, but should this percentage be different?
Thank you, Olga, and thank you to everyone for their comments. I think you raised some great points. I think, depending on where you are in the life cycle, there can be different challenges from a cash perspective. And there can also be different types of volatility that aren't just tied to the size, type of organization or where they are in the life cycle. In my current experience working for Honda of the UK manufacturing is moving from operating a business that was making cars to a business that is now in full preparation for liquidation. This obviously was a big change that came from our micro environment, albeit it's been driven by macro factors. But the ability to change and pivot unexpectedly and have that agility in the planning organization is very, very important, was strongly highlighted by what we've gone through over the course of the last few years since the announcement. And cash has obviously risen up the agenda, as in a liquidation scenario. Everything that the business has is eventually returned to cash to be returned to the shareholders. So I think, look very carefully at your organisation and where volatility can come from and what that might mean to your planning. Keep cash on the agenda.
Thank you for your answer, for this practical insight. Let's move on, and let's move on to the next question that we have this ambition to answer tonight. And this question is, who should be involved? Who should be involved in cash flow planning? And who else can answer this question better than Gemma Davey? Gemma will be speaking about how to be a better business partner in cash flow planning. Gemma, the stage is yours.
Thank you, Olga. So good afternoon, everyone. So the old saying, revenue is vanity, profit is sanity, cash is reality, has never been so true. And as William mentioned earlier, cash never lies. So when I'm asked to explain why is cash so important, I like to use the analogy of building your dream home. And in order to build that dream home, and for that dream home to stand there year after year, it needs solid foundations. The same way, in order for a company to build and grow and achieve its challenging long-term profit target, it needs cash to survive day to day. And without that cash, an organisation has no foundations, and eventually it will subside and it will collapse. And over the past few years, we've seen some extremely successful companies go into administration. The world has never been so volatile, and businesses have never been so vulnerable. And on my next slide, I'm going to talk about one real crisis that has hit every single UK business and household, and that's the energy crisis. And over the last year, gas prices in Europe have gone up a massive 600%. And that wasn't just a COVID-19 issue, but a number of factors. And the implications of these rising prices are that energy companies were buying energy for more than they were selling it. And we saw 26 energy companies, that's about a third of our UK energy companies, went into administration last year. And it's affected 3.7 million UK households. Now, over the years, I've heard many leaders say, oh, we don't need to worry about cash. We've got good reserves. We haven't got an age debt problem. But we've seen that even those companies who have had their cash levels literally turned upside down, household names that were once so strong have shown their vulnerabilities. The likes of Debenhams have closed all their high street stores, and we've seen John Lewis closing a number of theirs. So in this world of volatility and vulnerability, the question that I'd like to pose to everyone is, how can we, as FP&A business partners, help to keep on top of our cash position? What actions can we take on a day-to-day basis to give our companies the best chance of survival? So on my next slide, let me share some of my top tips on how to be a better cash business partner. So my first tip is get to know your stakeholders. And if we think back to those solid cash foundations, the first thing is to build and invest strong relationships with your key stakeholders. So if you have a treasury team, make sure you're joined at the hip as the cash owners. Make time to have regular check-ins with them. It could be 20 minutes, bi-weekly, monthly. And remember that it's great business partners that build strong relationships across their stakeholders. And the thing about FP&As is we're the ones that see that helicopter view. if it's a major contract coming in, or if you're seeing a change in wholesale prices, it's critical that we flag it as early as we can. And I like to say, think with your cash hat on. So in your organisation, if FP&A take more control of cash flow forecasting, make sure you keep close to your sales teams, to your account receivable teams, to your purchase ledger teams, to procurement. And thinking back at CA Technologies, I would regularly meet with the sales and accounts receivable team, and I was really able to influence the sales teams with things like payment terms, bringing forward invoice dates, so we could ensure that we were getting cash in for quarter end. And the AR team would also flag to me if we had any problem accounts, so we could really get the right sales teams involved. And I used to invite our cash flow forecaster along to the P&L reviews as they were happening, so they could really see how that story was evolving. And it allowed them to feel valued and they weren't just an afterthought. So make sure you involve them in the process. Okay, top tip 2. Challenge your assumptions. Never just assume. So once you've built those strong relationships, that credibility that you've built will allow you to be able to really challenge the decisions and assumptions that are being made to influence cash. So how do we challenge effectively? So it's not about going in there and telling someone you don't agree with their numbers. Instead, ask open questions to get clarity. So maybe if you're working with sales, get them to tell me, walk me through what needs to happen to get this contract signed. What are the blockers? What are the reasons to believe that we're going to hit this cash target? Okay, tip 3. Introduce a cash KPI to your management reporting. This will enable you to focus your leaders on cash. And I've seen quite a few companies actually add cash received elements to their compensation plans. And again, FP&A can be that seat at the table when these discussions are happening, if they've formed those right relationships. Okay, tip 4, stress testing. So I think this is something that in the past organisations might have brushed over. And I think we've all taken that attitude at some point of, oh, it's not going to happen to us. It happens to other organisations. But with events such as cyber attacks on the increase, it's really important to work with your stakeholders on stress testing so you can really get to understand your vulnerable areas and the impact that it's going to have on cash. So, what would happen if there was a cyber attack and it took your website down for 14 days? What if the global semiconductor crisis continued for another 18 months? What happened if one of your top customers went bust? How long could your business survive? Okay, final tip. Running retros. So we've recently introduced these to our wider finance teams, and we look at what went well, what could have gone better, and the actions to be taken. And these have been really effective at improving our processes. So on my final slide, let me share a call to action with you today, reflecting on your own business partner skills. So what one action could you start, stop, or continue doing today to make you a better cash business partner? Thank you.
Thank you, Gemma, for your presentation. And I would give 30 seconds to all of you to think on this question. It made me actually thinking what we can do better to become better cash business partners. If you want to ask questions to Gemma or to any other panel participants, please don't hesitate to do so through the question section of this webinar. And meanwhile, I'll ask you a question. It's time for a next interactive poll. Let me start our third poll, and that is, who should be involved in cash flow? Who is involved in cash flow planning in your organization? We do not plan cash flow, that's an option. Just treasury, treasury and FP&A, treasury, FP&A, and other departments. Who is involved in cash flow planning in the organization? We do not plan cash flow, just treasury, treasury and FP&A, treasury, FP&A, and other departments. I'm very curious to know, and I'm pretty sure that you are curious to know, to see where you stand in terms of other organizations. We do not plan cash flow, just treasury, treasury and FP&A, treasury, FP&A, and other departments. Okay, can't wait to see the results. Let me close the poll and share the results with you. Okay, what do we see? Who is involved in cash flow planning in the organization? And we see that 4% have voted we do not plan cash flow. Quite a percentage, I expected 0. Just treasury, 8%. Treasury and FP&A, 34%, and 54% saying that treasury, FP&A, and other departments. Gemma, I might surprise you out of the blue, but was it the results you expected?
It's definitely great to see that actually half the people are collaborating outside of treasury and FP&A. So I imagine with other departments, maybe such as to sales, accounts receivable, but also there's definitely probably room for improvement in there as well. And I think that refers back to the earlier questions in terms of how much time people are spending on cash, and also how it's being done as well.
Thank you for your comment, and it's time for me to hide the poll results and move on to our short discussion. So please, dear speakers, join me here on the webcam, and I'm going to ask you a question. How do you practically collaborate with treasury and other departments on cash flow? So the question is no longer whether you collaborate, absolutely sure you do, but how? And I will start with you, Bob. What is your thinking? How do you collaborate?
I think it varies enormously across the market, because it rather depends on how much you're reliant on teamwork on face-to-face meetings and what technology you're using as to what business models you have. So you could have a wide organization, distributed participants who effectively will have to collaborate either on Teams meetings or physically get face-to-face, or potentially just log into a system that maybe on browser based. So the really important point, I think, here is actually making sure that you can enable the necessary individuals to get involved with the process, so that they can start tying in with understanding KPIs and the impact of the decisions they make on the overall liquidity of the business. And I think it's something that certainly through most of my career, I've not seen a huge amount of that, because it's a technical exercise, and it's, I think, the sort of things that Gemma is talking about is helping to expand that across organizations, and that awareness is there. And it's, of course, it's been brought into very sharp focus over the last couple of years with the the shockwaves that have gone through the economy around the world.
Right. Thank you for your angle. And I will pass the word to William. How do you practically collaborate with other departments on cash flow planning?
Thank you, Olga. I think, when I think back to my experience at Honda, during the pre-pandemic times, we regularly had kind of cross-functional meetings across the European team, and that really gave me an opportunity to get to know some of the people in Treasury. And the important thing is just to ask what they want and what they need, and that can become very much a two-way street. I think to tie in with what Bob said and what Gemma presented as well. The idea of sharing cash drivers at the highest level is really important, and that's something that we've adopted through our recent times with the increased focus on cash. You know, at board level presentations, these KPIs are included, and that is, you know, really, really important to the overall message of keeping cash on the agenda. Things that are shared at the highest level normally have a habit of filtering down through the organization, and that can ease and facilitate the ability to keep that on the agenda with other departments outside of just treasury as well. And of course, that full level of collaboration is eased, as Bob said, by a good technology platform, and that really just enriches the quality of the cash flow planning.
Thank you for this angle. So technology helps, enriches, but does not replace human collaboration. And I want to pass this word to you, Atif. What is your thinking? How do you practically collaborate?
Well, collaboration should result in proper communication, of course, as Bob pointed out, and as Gemma stressed upon, the scope of stakeholdership has increased over the past few months. It used to be rather taboo to talk about cash outside the confines of typical finance and treasury. And if other departments talked about cash, they talked about in hush-hush terms. Now it's an open discussion. You have to reach out to the sales team, operations teams, procurement teams, whether that's IT procurement or non-IT procurement, for example. So this democratizing the cash discussion has happened over the past 18 to 20 months. And that has resulted in an improved focus on collaboration across the organization. So that's the culture I'm talking about. Now, in order to make use or make best use of that evolving culture, technology is helping us out. Virtual meetings have necessitated it that people join in, even though for 10-15 minutes to provide their inputs, that what's happening in their worlds, for example, how sales team or how the client services team is receiving feedback from the clients in terms of when the invoices will be paid and how much in B2B environment, for example, the environment that I come from, and so on and so forth. And then the other communication channels, which are very quick, for example, Skype Business, quick messaging to understand what's going on, what are the updates, so that those updates can be reflected in a 13-week cash forecast, and then subsequently those updates can be reflected in a long-term cash plan that we have for the whole year, and so on and so forth. So it's a much more collaborative and communicative environment about cash, as I've seen it evolve over the past few months in my experience, and I think that's a positive sign. But the quality of insights has to be stressed upon all the time. Don't take anything for granted or just on the face of it. Validate it, make it as factual as possible, separate it from fiction, and that's how you create quality cash plan for decision-ready information for the executive teams.
Thank you for saying that. It resonates with me a lot, and thank you for bringing in this mindset angle and culture angle. Gemma, you have heard other panelists answer this question. I know that you spoke a lot about how do you practically collaborate, but is there anything you want to add, having heard them, and is there any place for technology in the way how you collaborate?
Yeah, I mean, in terms of just reflecting on what everyone's spoken about, it's really topical. I was talking to one of our key stakeholders who puts together the cash flow forecast yesterday in the office, and we were talking, we're just about to enter our budgeting cycle, and we were talking together about, you know, how can we better collaborate together going into this budget cycle. So practical things like we've put a check-in in there straight away so that we can start to look at some of the key assumptions. So I spoke earlier about the energy crisis, and this is something for Compare the Market. So we have an energy journey, a comparison energy journey, And this is going to be a really critical assumption in terms of how do we think that's going to change over the next 3 to 6 months, because it's going to have a massive impact on cash from that revenue stream. So it's around having those debates and the assumptions in terms of what we think is going to happen. And I think from a technology point of view, it's around actually using technology to model out some of those assumptions and scenarios, and so that we can, as a storyteller, then explain those.
Thank you, Gemma, for your answer. And I think it's right time for us to move on, because lots of things have been said about technology, and we will look at how technology can help us with our payroll planning. And Bob Elliott will speak about how technology enables modern cash flow planning. Bob, the stage is yours.
Thanks, Olga, and thanks everyone for taking the time to give us the opportunity to share our thoughts today. When I was asked to join this session, I was reminded of very early in my career the advent of spreadsheets. I worked with VisiCalc, Multiplan, SuperCalc, ultimately evolved into Lotus, Symphony, and ubiquitous Excel. I remember the enormous impact it had from writing things down and checking them using calculators, etc., to being able to very, very quickly increase your productivity and do things with a much higher degree of accuracy and more output. And I think we're at a similar kind of watershed now with being able to do so much more with the same. I think my world is very much about producing more with the same rather than efficiency gains, doing more with less. So I'm going to structure this around these items here, the short-term detailed cash management, and also then look at the medium to long term, but split that into a direct and an indirect method. So on the next slide, I just want to use it to talk to the kinds of things that drive initially a short-term cash flow. So think about the kind of system you may have at the moment. By default, the ERP may generate you an output from the debtors and creditors, the open items. Maybe there's some commitments or GRN information in there as well, but it doesn't give you all the details. So typically, you manually extract data, put it into maybe a spreadsheet or some other model, then overlay things like the recurring items and calendar items. So we've got rentals, lease payments, VAT, all those extra lumpy items, prepayments, and those have to be put together with all the open items. But of course, if you've got it in a model, you can start thinking about flexing the terms rather than assuming that everything is paid or received as per contract. Then we can model maybe delaying some payments, accelerating or decelerating through the system. But typically, this is an operational treasury process, delivering quite a high degree of accuracy, especially in the very short term. But of course, its life is limited from the perspective of how far into the future is going to give us a good quality steer. So 4 to 8, maybe 12 weeks out, and then its usefulness will decline quite rapidly thereafter. And again, this is quite well covered with a lot of spreadsheet models, but until you get into things like multi-currency, multi-jurisdiction, and then life starts to get complicated, you need to start modeling potentially different exchange rate outcomes and looking at different balances and operations across the organization. And that can drive a lot of complexity. So we can go from quite a simple setup, reasonably easily partitioned elements, onto quite a complex level of requirements. So moving on from that to talk about the longer term indirect cash flow. Earlier on, we pointed out P&L, balance sheet, then cash will follow. And that's really what this topic is about. This is whereby the balance sheet and the P&L, we can derive the cash flow statement. Therefore, we have a cash flow. The real challenge, in my experience here, is producing the balance sheet forecast or plan. Because of course we've still got to model all the different drivers that are coming out of the different lines of the P&L. So the sort of thing here is, we need to model the revenues, we need to model the costs. How do each one of those impact the balance sheet? What tax rates have we got against those? And again, those tax rates then have a knock-on effect. But again, what are the collection and payment profiles that would then apply to all of those, just so we can start to understand the velocity of the cash as it goes through the system. And again, that's going to involve setting up the drivers, calendars, and the inevitable adjustments that need to be overlaid. I don't think I've reverse engineered a single cash flow model in my time in the market which doesn't have some sort of adjustment in it that says complex formula with then plus or minus a specific number in order to bring us to the valid result or meet the balance sheet balance. And of course, the limitation here means that it's operating at the balance sheet level. So therefore, your ability to analyze and slice and dice becomes limited to that level of detail. So it's difficult to drive operational cash responsibility down across the organization. So in the next one, what I want to talk about is the direct cash. And this I think of as the Holy Grail. I've worked on a number of these over the years, and it really takes everything that I've talked about, but then takes it to another level of detail. So imagine actually driving your sub-models of your cash right down at the level of the P&L. So what I'm talking about here is the fact that we could look at the cash behavior of pretty much every line in the P&L. Of course, we still need to overlay all the other elements of CapEx and the taxes, etc. But being able to understand the operational impact of each individual P&L in order to drive that cash flow, that is taking the volume of assumptions and variables to a whole new level. And of course, if we introduce things like exchange rates and variability across different jurisdictions, life gets very, very complex. And of course, the more you have this in your business, the more the demand and the value for various scenarios and stress testing. As Gemma said earlier on, what can you really do to improve? And top tips is stress testing, KPIs, how we're going to get the business to understand those elements. And of course, doing all this using old technology of spreadsheets, as soon as the demand comes in for multiple players to be involved and multiple versions of the data, then the complexity can get duplicated and escalate out of control very, very quickly. So this is where modern technology, cloud technology with connectivity to source systems will really drive your cash planning in the future. The ability for you to be able to automate those data loads, have a standard business model, can still evolve over time, replicate data and have multiple participants, people logging into a secure database. They can only access the data that they have access rights to, but being able to change their parameters that they're responsible for, but participate in the outputs from that. So it really brings the ability for you to scale your cash modeling across the whole business on a platform that again will be established on one set of source data. So your open items make up your debtors and creditors, and those are the balances that are going to be the starting point for your balance sheet and your cash flow. Therefore, you could actually have all of the short-term, medium-term indirect and the direct methods all working on the same platform from the same source data with necessary involvement across the organization, really taking us towards that sort of that holy grail of XP&A, as William referred to earlier. So with that thought, I'd just like to close with the thought that you can now leverage technology to make your cash flow planning a fully collaborative value-add exercise to drive insight rather than dark art practiced by a small team of finance specialists. Thank you.
Thank you, Bob. Thank you, Bob, for your presentation and for bringing this technology angle to our session. It's time for us to ask our audience, how do they use technology? But before I do that, let me remind our audience that you still can send your questions through questions section. Please don't hesitate to do so. And meanwhile, let me start another polling question, the last one for today. The question will be, what planning tools for cash flow you are currently using? Excel, ERP model, dedicated FP&A system, EPM, or integrated performance management platform, EPM plus ERP. What planning tools for cash flow do you currently use? Excel, ERP module, dedicated FP&A system, EPM, integrated performance management platform, EPM plus ERP. Most of you have voted. I give you 2 more seconds and I'm closing the poll. Let me share the results with you. That's good for all of us to know and for you to know where you stand among the other organizations. 77% of you voted that Excel is primarily a tool for cash flow planning. 80% stated ERP module, 10% dedicated FP&A system, and 6% named integrated performance management platform. Bob, maybe it's surprising to you, but can you quickly comment? What do you think of the results? Is it something that you have expected?
I would have gambled on it being a significant proportion on Excel, but at the same time, I was thinking, you know, depending on the size of organization that the audience are working with, I would have expected it maybe to be a little bit smaller, because larger very large organizations tend to have EPM systems in there. So having said that, Excel is still ubiquitous and we come across it all the time, and I have lots of discussions about cash flow planning with prospects and clients, and it really is becoming a hot topic, and it's nearly always starting from the base of Excel in the interactions that I have. So underneath, really, I'm not at all surprised.
Right. Let me hide the results of the poll and let me move on to our short discussion. Please, everyone, join me here. And if you have to name one key step in new technology implementation, what would that be? And let me start with you, Atif. What do you think is a key step in new technology implementation?
That's an interesting question, Olga, and rather relative to as well in terms of which organization and finance team you're talking about. But I think from experience, understanding, I would say forensically understanding what exactly do you need from a technological point of view is the key. Be brutal about this understanding that what exactly is the requirement. Over procurement of technology might result in a wasted technology, and that might not produce the value add that you were seeking in the very beginning when you started out to procure the technology. Once the technology is procured, I think bringing everyone involved on board and enlisting their long-term support throughout the implementation process is the second key that I would stress upon. And therefore, you are basically combining technology and talent together, which is basically the definition of my team that I've started to use. And this is how you ensure, and this is coming from my experience, this is how you ensure that technology does not become kryptonite to talent and vice versa. You know, you have to have a right kind of a talent to make use the right kind of a technology that you have either procured and implemented or about to implement. So having that mindset properly sorted out is the very first strategic step towards implementation of futuristic technology that we might consciously think about implementing.
Right.
So those.
Right, thank you, Atif. And William, I would ask you for a very brief answer. What's, from your point of view, is a key step in new technology implementation?
Thank you. I think that from my point of view, the key step are the steps that you take before you begin the implementation. Planning cannot be overstated. As Atif mentioned, getting the right technology is really important, but I think having the culture, the planning, the preparation, the understanding of the drivers, and getting the right people into your team and the right buy-in from senior management throughout the organization to the people who are going to be involved is essential. And that almost comes before both the choice and definition of the technology. Important to note, technology is not a silver bullet. It won't change things. It can be a catalyst for change, but if you rely on the technology to do the changing for you, then it can be doomed to failure before it starts. I think getting the culture in place first is really important. One thing I would say as well with the poll result is if you can get off Excel, then do. I've experienced going from Excel to a full EPM system, which we've then had to decommission, and going back to Excel really does feel like going to the dark ages. So if you can get off Excel, I would really encourage people to do so.
Right. Thank you. That technology is not a silver bullet, but it certainly can be a catalyzer. That's something I will take as a quote for myself. Thank you for that. And Gemma, what is your brief answer to this question? What's the key step in new technology?
I'm nodding at the silver bullet comment, definitely. And I remember a thought leader, very experienced systems integrator, saying to me, Gemma, there's no point in putting a new system in unless you sort your processes out. And I think it's really about spending time understanding your processes, but also sorting out the efficiency in your processes. Otherwise, you're never going to be successful.
Right. Let me move to Bob here. Let me move to Bob. What do you think? What's a key step in new technology implementation?
I have a lot of these conversations in presentations that I do because there's an enormous amount of complexity that I've hinted at that we could have talked for several hours just about the nuts and bolts of cash flow planning models. And the really important point is you've got to understand what is the most important factor. And I often use the phrase, where should we start? We'll start somewhere. Work out where are your quickest wins, or with the best value, or what is maybe the easiest to do. Whether it's short-term cash flow or getting the basics right on a new platform, and then developing the more sophisticated cash flow. These are not turnkey models that I'm talking about here. You need to get something set up, get the participation, and they can help drive change in attitudes, understanding, and be part of digital transformation programs. And they're a significant part in that journey to XP&A that William alluded to earlier on as well. So start somewhere and take.
Right, we have a meaning of nice quotes today. Start somewhere. That's something I'm putting down as well. And let us move to one of the final bits before Q&A session, and that is key takeaways. I would ask each of you to state 30 seconds key message, key thought you are taking away with you from this session. And let me start with you, William. What is your key takeaway?
Thank you. I think that regardless of where you and your organization are in your life cycle, or the macro challenges that you see in the marketplace, or the overall situation, cash is paramount, and cash planning is paramount. Can you really say that your organization is fully robust if you don't have effective cash planning in place? So I would say never take your eye off the cash ball.
Never take your eye on the cash flow. I'll get my book of notes is getting full today. Gemma, what do you think? What is your key takeaway?
I think my key takeaway is really reflecting on what Bob was saying. Definitely not waiting for everything to be perfect, and really I love the start somewhere and looking at those quick wins and wins that are winnable. So definitely I think that's something that you can not only apply to when you're looking at cash flow forecasting, but actually to wider forecasting and wider processes. So definitely, yeah, start somewhere.
Nice message to everyone. Start somewhere. And let me move on to you, Bob. What is your key takeaway?
I think understanding, making sure, as Gemma pointed out, that you understand your processes and people, who needs to be involved in doing what and when, and the inputs and outputs from those interactions are so important, because as we've already discussed, it's not the silver bullet using technology, but it can be transformational as long as you approach it in the right way. So understand the processes, the people, etc., and then get it on a platform that's going to help drive that transformation forward.
Thank you, Bob. And Atif, your key takeaway in 30 seconds.
Well, to paraphrase Warren Buffett, plan tells you more of the planner than the plan itself. So be the most radical, the best planner, and try to be one. That's my key takeaway, and that's exactly what I practice on as a financial leader, because that's what my expectation is from my team, and that is expected from me. And the key to two things that I can share to develop that kind of a mindset is to focus on critical thinking habits, and then try and learn adaptability quotient, because the change is happening, transformational change is happening, and planning cannot happen in isolation within the organization. You have to understand the environment also within which your organization exists or persists. So those will be my takeaways. Those are the things that I focus on or am focusing on for the time being.
Thank you so much for all your messages, for all your thoughts on this session. And let us move to Q&A. Now it's time to answer at least some of your questions. Thank you for all the questions you're sending through the question box. Those we won't have time for tonight, we will answer in writing. And let me start with you, Gemma, with the first question addressed directly to you. Gemma, you were speaking a lot about how to collaborate between teams, and obviously when we collaborate across the organization, we need to share KPIs. What are key cash flow KPIs to circulate cross teams? What do you recommend?
Key cash KPIs, it's a good question. I think really it comes down to what is really understanding what is important to your organization, and where you are. So for some organizations it might be a cash target, it might be quarterly cash targets. If you're a smaller company, you might even need to go to the next level down and breaking that up smaller. But also thinking around cash KPIs in terms of your traditional AR, debtor days, creditor days, and depending on where you are, if you've got a cash flow problem in terms of your debtor days are at 60 days but your creditor days are at 30 days, then it's around maybe bridging those as well. So
thank you for this very practical insight. It certainly depends on the type of organization. For sales teams, it will be completely different than for production companies. Thank you for that insight. And let me move on to you, Atif. We have quite an interesting question, I think, in the area of your expertise. In our organization, planning is still P&L based, and cash is mainly prepared by treasury. How to overcome this mindset?
Well, be open. One conversation at a time, I think, is the way we overcame that kind of a mindset that, as we have talked about, treasury is solely responsible for cash. Cash is the business need, and business is everybody's responsibility, and therefore cash is everybody's responsibility. This message has to be repeated within the organization as often as possible. And the more you play this message, the more people realize their responsibility and talk about it. For example, the KPI. So when you talk about the DSOs and DPOs, only Treasury Department cannot do it in isolation. They have to be interacting and collaborating with the people who can provide those insights to them, so that they can do the cash planning better. So it's communication, communication, communication. Be clear, be forthcoming, and be there.
Nice. Thank you for this motivational answer, Atif. And let me move to you, Bob. That's a question related to data and technology. One of the biggest barriers to cash flow planning is quality of data. How to practically overcome it?
I think the first point is really to start with the simple things first of all, because I talked about things like open items, and we also talked, Gemma referred to having solid foundations. Your starting point has to be your existing balance sheet and in your bank statement. You know the starting point, they're audited, they're part of systems. So then it's really about understanding what data is available to drive those cash flow forecasts. Now, with the technology available to us now, you should be able to get data from just about any database. If people are telling you no, it's more of an awareness issue rather than a major hurdle. Databases, web APIs, we can talk to just about anything. So I actually firmly believe you can make the data quality issue go away by getting good quality starting points. You develop your business model, then you're going to have to hone and refine your drivers around that. But I really do believe that with those solid foundations, you should be able to move to a situation where you can say to the business, there is no excuse not to have a good starting point and good quality data. And I think it's only come about in the last few years. So I've been pulling data into systems from multiple data sources using ODBC or specialist connectors, and those days are disappearing fast now. The mesh and APIs that are available now make it much easier to pull data from source systems. So I think technology is going to be a big enabler in addressing that very data quality issue.
Right. Thank you for this angle. Thank you, Bob. And question to you, William. You've apparently had to change your team setup very quickly during changes in your organization. So that question might be good for you. What if P&A setup do we need in order to play cash scenarios quickly and multidimensionally? So what team setup do we need for that?
In terms of a good team setup, I think, as I said, having a good integrated platform is very important, but also having a team that's truly a team of business partners, understanding what are the changes that are going to happen or are happening within the organization, getting good quality information, not all of which can be data. Sometimes it's all in the air. It comes from our business partnering ability to have an honest conversation with the person on the ground. Knowing what's going to happen next is what will give you an accurate forecast. And every forecast is out of date as soon as it's published. But in that kind of XP&A vein, we should be looking at multiple scenarios. We should be looking at rolling forecasts. We should be looking at having things really up to the minute. Depending on how big the size of a cash problem or cash priority can be, and we don't always need to focus on cash just because it's a problem. The speed of change and the speed of the ability to see something different is really important. So I think having a very well integrated FP&A platform, that doesn't just mean a technology platform, that is extremely important, but platform in terms of people. So really to draw on Atif's definition of team, which I think is truly excellent, talent plus technology together will mean that you get really good data, you get it fast, and you understand what's going to happen next.
Right. I like those answers, and I think we certainly have time for one forward-looking question from our audience. And the question will be to all of you, so I ask all of you for an answer. And the question is, as business leaders, are you seeing use of artificial intelligence in FP&A cash flow in near future? And let me start with you, Gemma. What do you think? Can you imagine AI being part of your life?
I think we'd be very naive to think that it's not going to be part of our lives. So absolutely, how fast that's going to happen. But I think it's definitely something as leaders we need to be very mindful of.
So you can imagine AI being part of your cash flow planning, let's say in a several years horizon.
Well, and even in sort of the medium term. Yeah. Right.
What do you think, Atif? What is your thinking? Can you imagine AI?
Well, in my world, that's already there.
You would say that.
Right. So modern ERPs have already got the features of AI in various forms, and TMS's treasury management systems are catching up. So as Gemma said, it's not a matter of whether or not, it's a matter of when, and that when is getting nearer and nearer because of COVID-19 pandemic. So yeah, very much so. Because essentially when you talk about planning, you're talking about patterns and cycles, and AI can help you read those patterns and cycles much better and predict them too. So yes, in fact, I'm looking forward to it, more and more of it.
Perfect. What is your thinking, William? Do you see a place for AI in cash flow planning?
Absolutely, yeah. I think, as Bob said, that a lot of cash flow planning is based on assumption and modeling, and those models need to be refined. Predictive analytics, business process automation, and AI can look at how that refining can take place far quicker than we can. So I see it as a great proving ground, actually, for AI in business planning. Other areas might need to follow. They can be less predictive depending on the type of business. But actually with cash, it could be a really, really good proving ground because of the level of data that's available, the breadth of data down to individual customers, how they tend to pay, when they pay at certain times of the year, different month cycles, when the CFO has a holiday and can't sign the payments off. So I think it's a great proving ground for AI.
Thank you. And Bob, can I ask you for a very brief 30 seconds answer? Do you see the space for AI? Bob, you can briefly answer to this question. If you see the space for artificial intelligence in cash flow planning. Oh, you probably on mute, that's why.
From my perspective, it's. Can you hear me okay? I'm really excited about what's going to happen with AI and machine learning when it comes to cash flow, because just as William has said, it will give you a kind of prove ground comparing statistical analytics across potentially vast amounts of data, very, very granular, and it'll help you focus on forecast accuracy, forecast bias, and really just help benchmark and refine your cash flow behavior in the coming years. So I'd be really excited to see the next step in this that's going to be there, and it's going to be available for so many businesses, because moving to the cloud, you have access to these Azure and Amazon platforms that are going to give you the processing power and access to those kind of tools. So I think it's a really exciting time to see how that's going to pan out.
Thank you both for your answers. Thank you, dear audience, for all your questions. Thank you, dear panelists, for all your answers. And what is left for me is just to invite you to participate in our survey for 2022. It will take 10 to 12 minutes. Don't hesitate to do so. Besides that, join our 2 upcoming events in March. You're very welcome. And if you want, first of all, thank you to our sponsor again, Unit 4 in Business for People. And if you want to stay in touch with us, certainly you can choose a way that suits you better. We will be happy to welcome you among our members. Before you leave, please take a brief survey for a minute or so. Your feedback is very important for us. Thank you all for being here tonight. Have a good day.
Thank you.
Thank you.
Bye-bye.
Bye-bye.
Bye.
Cheers.
Thank you. Bye.